PayPal stock. PayPal stock is the subject of today's video. I want to go ahead and read through this article with you guys, give my opinion perspective on this one. PayPal, I am loading up at this price. So I want to hear what this gentleman has to say. I want to kind of give my opinions and perspectives on this. Earlier today, I reacted actually to a Palantir related article. So I thought stay on the article ones until tomorrow and go ahead and do this one in regards to PayPal. Now, if you follow me closely, you know PayPal, I am buying the stock extremely aggressively right now. Literally every single week, pretty much, I'm buying PayPal stock right now. And I'm going to likely continue to do that through the end of this year, which shows you how much kind of belief I have in the risk-reward profile with PayPal. I'm adding the stock so aggressively that it's now become the 5th biggest position in the public account. The 5th biggest. That shows like I am not playing around when it comes to stock, and I'm adding this one very aggressively. The only positions larger than it are Meta, which we're up 146% on, Tesla, which we're up 928% on, Amazon, which we're up a little less than 30% on, Elf on a Shelf, which we're up 1,700% on. So those are the only stocks bigger right now in the public account than PayPal. And so PayPal, I'm just adding as many shares as fast as I possibly can through the remainder of this year and putting those babies in the filing cabinet. And I might continue to buy PayPal, you know, honestly, even into 2024. We'll see where the stock trades out. Now, Meta, in terms of kind of PayPal versus Meta, PayPal is the best risk reward I have seen in the stock market since Meta back in Q4 2022. When they dropped that stock under $100 a share, that was just insanity, literally insanity. And what I see going on right now with PayPal, in my opinion, is also insanity between the valuation, and we'll get into some of that in this article here today, and in the growth profile of PayPal. I'm like, this is like stealing money. So yeah, I appreciate everybody joining me as always. Thanks so much for being here, folks. New all-time high subscribers, 33,333 subscribers on the channel. I appreciate each and every one of you guys. Thanks for being here. Also, just so you know, pin comment down there. If you're looking to join my Patreon, you get access to see all the moves I'm making in the market, all the stocks, different stocks I'm buying, selling, the hedges I'm putting on the Patreon portfolio, which I now have some hedges inside that portfolio. Plus, you get access to the Discord chat. It's $19. It's like literally a no-brainer. Like, you got to be part of that. And then I have another tier, which is a $69 tier, where you also get access to a course along with this as well. So that'll be pinned comment down there. All right, so PayPal, I'm loading up at this price. The last, by the way, strong buy analyst rating in terms of his analyst rating, right? The last couple of years were painful for PayPal investors due to a myriad of disappointing earnings key metrics. First off, this is very important. Very important. I state this right from the go, okay? Whatever happened in PayPal over the last 2-3 years and whatever happened to shareholders the last 2 or 3 years, it ends up being irrelevant. All that matters is what happens over the next 2 to 3 years. So, people look at a stock and they say, oh, it's gone down a lot. That means it's a bad stock. No. Wall Street screws up all the time. All the time on the most famous companies in the world. Last year, they thought it was a smart idea to sell NVIDIA at $110 a share. $110 a share. We're not even a year later, and NVIDIA's $400 plus. They thought it was a smart idea to sell Meta under $100 and not buy. Meta's sitting at 300 plus right now. Wall Street screws up on the most popular stocks all the time in the market. And so regardless of what happened with the stock over the past year, 2 years, 3 years, it's all irrelevant in the end. All that matters is what's going on for the underlying business fundamentals. This stock now trades at almost 5 times cheaper than all-time highs. That's insane to think about. While the business is still growing and the management works hard to improve profitability, my valuation analysis suggests the stock is massively undervalued. Investment thesis, PayPal. Stock experienced hard times in the last 2 years. Today's share price is about 5 times lower than the all-time high in the summer of 2021. This is due to many disappointing earnings and downgrades over several quarters, but the business still demonstrates decent revenue growth and stellar profitability. Yeah, decent revenue growth. I mean, we're looking at kind of like an 8% range right now in the short term. My belief is they're going to get back to 10% plus, likely within a quarter. So we'll see if that plays out, but that is my personal belief, right? But even if it's 8%, that's decent, right? Stellar profitability. The balance sheet is also in excellent shape. Yes, absolutely. And that's very, very important. And the stock is significantly undervalued with massive upside potential. I think a recent stock price plunge plunge after the latest quarterly earnings release provides investors with an excellent investment opportunity to assign the stock a strong buy. It goes through obviously this, some of the stuff you can see obviously for PayPal's 10Ks and things like that, right? The company's fiscal year ends December 31st with a sole operating and reportable segment. About 92% of PayPal's sales are generated from transaction revenues. Okay? According to the latest 10K report, about 43% of fiscal year 2022's revenue was generated outside the United States of America, right? So, basically a little over half the business comes from the U.S. Financials. The company's financial performance over the past decade was solid. Revenue compounded at an impressive 15% CAGR, compounded annual growth rate, okay, CAGR. Despite robust revenue growth, the gross and operating margins stagnated and narrowed despite the business scaling up. On the other hand, the free cash flow margin, ex stock-based compensation, SBC, has improved significantly, right? Yeah, but some will point that, there's not many negatives you can point out when it comes to PayPal, but if some want to point out SBC, then that's, you can point that out, right? PayPal's balance sheet is solid. Okay, now why is it so important that PayPal's balance sheet is solid, right? Why is this so important? This cannot be stated enough, and this is why I say this is one of many reasons this is one of the best risk-reward profiles in the stock market. The reason being is obviously at some point in time we're going to have a recession where unemployment climbs 5, 6, 7, 8, 9, 10%, depending upon how bad the recession is, right? Whenever that is, and your opinion might be next year or the year after, whenever it is, okay? Don't matter what, it's going to eventually happen. I can tell you, I don't know if all the companies in this space would make it through a significant recession. I think there's many of them that would end up in big financial trouble and have to sell for pennies on the dollar. I think you could even see some government bailouts of some of these guys. I really do. PayPal, on the other hand, is not one of those situations. PayPal's a business that has been through the great financial crisis. They went through the Rona crash. They've been through it, right? So this is not, some brand new company. They went through the tech bubble. Like, this company's been around a long time, and they've weathered all these different storms. And so that's one huge advantage that just other guys just don't have, that they really compete with, because a lot of these guys were birthed out of the great financial crisis, like after great financial crisis. So they really haven't been through some major situations yet, right? With about $10 billion of cash at its latest reporting date, the capital structure looks prudent, with below 60% leverage ratio and relatively high covered ratio. Short-term liquidity metrics look healthy as well, right? Free cash flow is reinvested in growth and share repurchases. Over the last 12 months, the company repurchased more than $5 billion in shares. I do not expect the company to pay dividends for the foreseeable future. No, probably not. The latest quarterly, although I don't think it would be a bad idea long term, the latest quarterly earnings were released on August 2nd when the company topped consensus estimates on revenue and the bottom line. Revenue demonstrated a solid 7% growth year over year. It's not the best growth, certainly for PayPal. This has usually been a double-digit growth company. But we have been in a goods recession. So if we're coming out of that goods recession, you should see revenue accelerate to the upside. And the EPS expanded from 93 cents to $1.16. Despite solid performance across key headline financial metrics, the stock declined dramatically after the latest earnings release. A few reasons caused investors disappointment. One is the deteriorated loan portfolio due to the strict underwriting standards. I would rather have stricter underwriting standards. Maybe I just have a different way of looking at this business, but I'm like, I'd rather that than not, right? Even in regards to their sale to buy now, pay later business in Europe, right? And selling off, obviously the liabilities, or you can call them assets, you can call them liabilities, whatever you want to call it, right? In relation to the buy now, pay later business in Europe, right? That is one of those decisions that it's going to hurt PayPal in terms of they can't make as much money if they just, kept that on their books. But by selling that off, right? If I recall, they sold it to KKR. Don't quote me on that, though. I think it was KKR, right? By selling off that, I don't think people understand how much this matters. By selling that off, they just de-risk the business substantially, right? If we know buy now, pay later, we know that that's a business that, if things are not going to be paid, if bills are not going to be paid, that's probably one of the first that people aren't going to pay, right? Then maybe after that, they'll skip credit card payments. Then maybe after that, they'll skip, I don't know, their car payment, and then maybe after that they'll skip their phone payment, and then maybe after that they'll skip like their shelter, right? Their rent or their mortgage. But like buy now, pay later, seen as a riskier business. So by getting rid of all that, let's call it boogeyman, right? You get the boogeyman out of the room, at least in terms of European business. I think that was one of the smartest decisions ever. Another reason is decline in active accounts from 433 million to 431 million. Now, my opinion on that, right? That's a joke. Like literally, first off, it's basically flat. Secondly, in terms of this is cake to grow. Like it's nothing to grow active accounts. Like literally all you need to do is offer some incentives. You get $5 to connect this and $10 to connect this. Like give me a break, man. If they want to bump that user metric up another 10 million, 20 million, 50 million users, that's cake. The question is, do you want to attract potentially a bunch of users that aren't going to really use your product? PayPal, Venmo, that's a big question. Or would you rather just be much more profitable, right? The third reason is the consensus estimates miss from the operating margin perspective, though the metric expanded year over year. I consider these 3 points as minor issues and prefer to focus on the improving trend for both revenue and the operating margin as well as the bottom line. The upcoming quarter's earnings are scheduled on November 3rd. Quarterly revenue is expected to be consensus $7.38, which is 7.7% growth, right? I don't know why they said 738 here. Maybe it makes 7.38 billion. I'm trying to figure out why he put $7.38. You should just put like 7.38 billion. Like in my opinion, you know what I mean? Like instead of this, it's almost confused it with like EPS. Revenue is supposed to be 7.38 billion, which is a little under 8% growth year over year, right? And that's right in line with what the company said they'll do. The adjusted EPS is expected to follow the top line and expand from $1.08 to $1.33. I like this steady improvement in financial performance. When we saw the latest quarterly report, right, I think PayPal might have sandbagged a little bit. In my thought process in regards to that, right, is it honestly might be a little smart to sandbag. Because think of it like this, right? We know the time is ticking on PayPal. And when I say the time is ticking, what do I mean by that? We know the new CEO is going to be announced at some point soon. It could be a question of in the next few weeks or the next few months, right? But we know likely, I would say 99% probability the new CEO is announced either on that earnings day or a little before the earnings day, okay? As in like maybe a few weeks before or something like that. I would say there's probably a 1% or less probability the new CEO is still not announced when they do their next quarterly report, and they keep it going all the way into December. That's not very likely at all, okay? Because that's cutting it way too close, because we know Dan Schulman stepping down. We know that's coming very soon, right? So knowing that, does it make sense to potentially risk missing numbers, missing earnings? That would be a bad look. New CEO comes in, you announce this new CEO, and then you come in and miss numbers. No, you kind of want to put numbers out there that you're like, we got this in the bag. Like, this is easy. And if we hit to the upside, great. But we don't want to put in anything that's even questionable, right? Makes sense. When you got a new CEO it's about to announce, that would be a bad look. And for a company that stock price has already had a horrible last 2 years, the worst thing would be to announce a new CEO and then you miss numbers. Like, put numbers out there that you can likely end up smashing, right? During the latest conference call, the management reaffirmed its full-year guidance, which is a solid indicator for me, given the challenging environment where many companies are downgrading their estimates. I also like the management expects a notable 20% non-GAAP EPS growth. Efficiency initiatives implemented by the team will achieve this. They are not done yet. According to Daniel Schulman, the CEO, more than 200 improvement experiments are planned to be tested in Q3. The amount of A/B tests that go on at PayPal on a daily basis is pretty shocking. You really got to find out a lot of that detail in the latest conference call. The company also implements AI in its internal process to streamline and increase efficiency. I am very optimistic about management's initiatives to boost profitability and create value for shareholders. As an investor, it is crucial for me to see the management's commitment to innovate and implement changes to streamline internal processes. Because over the long term, the most efficient players in the market will be able to sustain a noticeable growth pace. Secular trends are favorable for companies like PayPal. According to Statistica.com, the global digital payments industry is projected to compound at 12% yearly. So if the industry is supposed to do that number, then I want PayPal doing that number over the coming years, right? The secular shift to consuming more via e-commerce will be a significant tailwind for the industry. Given PayPal's strong brand, the company can generate superior profit margins and reinvest them in innovation. A vast customer base, though slightly deteriorating, also gives PayPal a solid competitive advantage. All in all, PayPal is firmly positioned to absorb the industry growth, 100%, right? And you can play a fun game. Who wouldn't want to switch places with PayPal? Name me one company in the digital payment space that wouldn't switch spots with PayPal. Every one of them, including even Square. And I actually like Square, but even Square would change places. Everybody would change places. A firm would change places. Everybody would change places with PayPal in a second, right? That they compete with. That's just bottom line. Valuation. The stock significantly underperformed the broad market with 17% year-to-date price decline. PayPal's share price is now about 5 times lower than its all-time high in the summer of 2021. Since then, the stock has experienced a sharp bearish trend and rarely sustainable rallies. It is also important to mention that the stock now trades about 2 times lower than the Rona level in February of 2020. Now think about this for a moment. Right? Here we are with PayPal. The company, what has the company done? Expanded revenues and profitability in an epic way over the last 3 or 4 years. And yet the stock trades at half the value of where it was years ago. I mean, it's just, we're in silly land right now, okay? Silly land when it comes to PayPal stock. Absolutely silly land. It is what it is. I mean, if you can't see it, you're blind, okay? It's a silly land. Seeking alpha stuff, I'm not going to give my opinion on that, but PayPal looks massively undervalued to him, he says, okay, and I agree. Now, let me continue with simulating the discounted cash flow approach. I use 10%, for discounting future cash flows. I have a consensus estimate for revenue available in the next decade, projecting 11% revenue CAGR, which looks fair to me. I use a fiscal year's free cash flow margin as a base and expect it to expand by 50 basis points yearly, which is 0.5%, okay? I believe that the assumptions I use for my simulation are conservative. The stock is massively undervalued. And if you want to pause the video and zoom in, you can do that. Obviously, you can see the full article on Seeking Alpha if you want to zoom in and spend more time looking at that and whatnot, right? The stock is massively undervalued, even under very conservative assumptions. The fair value of the business suggested by my discounted cash flow simulation is far above $100 billion, 100%, I agree. Meaning that there is vast upside for the potential of the stock price appreciation. Risks to consider. Now, these are a lot of the risks, we talk about obviously all the time in regards to PayPal. Everybody in the payment space is a risk to consider, right? All those guys. But the important thing to remember, okay, the super important thing to remember when it comes to all these guys, okay, I don't care if you're talking about Apple or Google or MasterCard, Visa, I mean, put them all up, put everybody that PayPal has to compete with in any space. You could put up a firm because obviously buy now, pay later is something they compete with a firm on, right? Obviously the Braintree business has certain competitors, right? Which is a shining gem, a diamond in my opinion in regards to PayPal, right? Throw them all up. All the companies that PayPal and Venmo and Braintree have to compete with on different ends, right? And at the end of the day, think about this for a moment. They have had to compete with these companies for 10 plus years. And yet, what has it meant? It meant PayPal growing immensely. Transaction volumes, revenue, profitability, everything across the board. The company just got more and more dominant with all these guys they've been competing with for 100 years now, right? Bottom line, to conclude, PayPal stock is a strong buy. It is rare to see such a profitable business with consistently growing revenues and a clean balance sheet with massive upside potential. I think that the share price plunge after its latest earnings release was a massive overreaction, providing a strong buying opportunity for investors seeking high-quality business traded at deep discounts. The competition in the industry is intensifying. It's been there. I don't know if it's intensifying. I think it's just been there and it's going to continue to be there. I don't think it's going away. But the overall pie is poised to continue long-term growth as secular tailwinds will contribute. The upside potential far outweighs all risks and uncertainties, they say there, okay? Obviously, I have my opinions on PayPal that I've shared with you guys many times. I think this company has immense growth. I think it's pretty low risk, and I'm going to continue to buy this stock. Throw it in the filing cabinet. I think this is one I'm going to make really good gains on over the next few years and sleep very well at night. I appreciate y'all joining me as always. Thanks for being subscribed, folks. New all-time high. I appreciate y'all. Make sure you get in my Patreon. That's going to be the pinned comment down there to see all the moves I'm making, the hedges I'm making in the Patreon portfolio. Get access to the Discord chat. And like I said, I do have the tier as well with a stock market course included into it. That's pinned comment for access to that. Much love and have a great day.